welcome to the Acknowledger Twitter Spaces. So, this is Yash here, co-founder and CEO of Acknowledger, and today we have Bliv.club as our guest to talk about. I think it's a really interesting topic. We have been talking perpetuals and futures contracts since for tokens, but this is something really innovative, and the Believe Club has introduced this for NFTs as well. So I want to welcome Belief Club team. Hey, hi guys. Thanks for joining today.
Uh,
Uh,
hello. Hi. This is Tohidur. Can we just wait for 2 minutes? Vikas is just joining. Yeah, Vikas is already.
yeah, yeah. Okay, I'm inviting Vikas.
Hey, hi everyone. Good evening.
Hi Vikas. Thanks a lot for joining today. Really appreciate it. So
Hi, Yash.
Vikas is
Hi.
yeah. So Vikas is the co-founder and CEO of Bliv.club, and they are doing something really interesting, which has never been done before in the past, which is trading NFTs over futures. And it's we have been doing it for tokens for a long time, and we have seen that BitMEX is one of the pioneers for futures contract in the past, and they have dominated the market, and they were really big. So I see the NFT market to become big like that, and Believe Club is one of the first. They have the first most advantage, and I think few days back they just launched their testnet too. So I'm really excited and welcome the Believe Club team. Thanks a lot for joining today. Really appreciate it.
Hey. Appreciate it, and glad for the nice words about the product. Thank you, Yash. Thank you for all the support. You have been a very strong force of support from us from a very long time. So glad to be here and glad to be the part of the journey of Acknowledgers. Strike off like doing amazing, bringing amazing concepts, projects, and letting the community know about them. Thank you. Thanks a lot, Yash.
Yeah, absolutely. And by the way, just for we have been recording this session, so we usually uh, kind of trim the best part of the sessions and share it, broadcast it with lot of other communities as well. So just for the audience, one really interesting thing that we have done, I think Vikas and I have been know we know each other since 2017 now, quite a long time, and we never thought we'll be parallelly building our own journey, and I'm really excited to talk about Believe Club. And Vikas, you can just tell us more about how you started, what has been the journey, what was the seed to this idea, and you know uh, how you got started. So that what was that aha moment for you?
Sure, it's a very interesting question actually because everybody loves their journey and everybody loves talking about it, and I'm also the same guy. So the interesting story behind the idea is we were pondering over the question like, okay, I own the NFT, now what? So back in the days of 2021, this question was not yielding a lot of answers. Like, okay, I own an NFT. Now what? That now what was pushing me to the corner against a wall. And I was like completely pushed against a wall. I was not able to get so many answers. So that was the thing which started my foray into understanding like what are those areas where I can make this or this NFT, this amazing NFT ecosystem go further. Because back then people were just focusing on minting the next next blue chip or the yuga replace like the projects which can actually replace yuga or dethrone yuga, these kind of things. But we were trying to ask a question one step ahead, like what if this industry happens to become the industry like crypto, then what kind of ecosystem this market will require. And that's how the journey started. And then I met my co-founder Abhishek and Siraj, and we started pondering over this. Then we figured it out one thing, that according to the human nature, some things never change. And that one innate quality of human nature is that they never stop taking bets. And when I say that they never stop taking bets, it's their innate quality of moving forward and growing. So one of this thing actually gets accomplished when people trade in the uh, existing markets, whether it's stock market, futures market, and all these things. Then we mapped out what can be the use cases around this human nature plus Web3 plus NFT. That's how we combine this idea of financial derivatives on top of NFTs. It was very hard back then to make people understand that what do we mean by derivative, because derivatives over NFT, there were other meanings as well, because people were thinking that we are building a derivative of the art. Then we have to actually explain them that, boss, we are not doing the derivatives of the art, we are doing financial derivatives, which means that we are allowing futures without expiry, the perpetual product on top of these NFT, blue chip NFT projects. And then instead of us, the other person on the other side, they used to say, aha, okay, now I get it. And then they used to ask, okay, what and how you are doing it. So these kind of amazing, like when we used to capture this, when we used to see this expression on their face, that used to give us that confidence that, boss, we are in some right direction. And the past data around these markets, like the derivative markets, this essentially was giving us that confidence, because the derivative market is like just like many fold bigger than the underlying spot market. So that data, that expression on the people, were continuous feedback for us that we are progressing and we are building in the right direction and for the right audience. So that was the quick story for us, that how we forayed into it, how we get into it, and what kept us moving. That those expression on the people faces when they understand our idea, that kept us moving.
Awesome. Yeah, I think that's the right way to approach any idea. Even for us, it has been a lot of, going to the, whiteboard, writing the ideas, pivoting, then, changing the core dynamics. It's a long process to get to where the final product goes. And even after doing all of that, maybe, after a year or two, the product might be completely different. So this we have seen in so many companies, and I think that's the way ahead. But I think you need to follow a proper structure, which you have done. Obviously, that's why you guys are here. And I also want to understand. So in futures, what people usually do is, there's a for every short there's a long, and you have to deposit your assets. So now, how the this complex uh, part of the trade, how it works? Can you throw some light on it? Like, what's the process? Say if I own a board ape, or a goblin. You are I know you your mascot is goblin for Bliv.club. So say suppose we have goblin, and as an owner, how can I leverage Bliv.club? So what's the process?
Sure, it's a very interesting question, because that's the gap we are trying to fill. So I'll first take an example of the real world. Let's say in the real world, when people are a commodity trader, let's say somebody is a copper trader in London Commodity Exchange (LCX), then generally what happens, let's say if they are somehow doing this commodity trading, and let's say they own some physical copper, they need to have some alternate ways. Let's say if because of external macro factors, let's say for an example of for the sake of an example, this war, because of that, let's say the price of copper is going down, or let's take an example of oil, because oil went actually negative. So what happened there? Because oil was a physical commodity, we knew you need to store that, and when you need to store that, you need to also ensure that you also hedge the price in such a way that if the price was supposed to go down for any external factor, you can at least have the original value of what you actually bought the oil for, you can still maintain that. So in the real world, there are markets where you can hedge your position. So if you own physical commodity, you can take a short position in these markets, right? So that allows you to essentially at least have your theta neutral position. But that is a gap we identified that is not there in NFT market. Hello, am I audible?
Yeah,
Yes.
you're audible. Yeah,
Perfect.
you're audible. Are you able to hear me? Yeah, I think
Yes, loud and clear.
I don't know, some technical glitch, so just I don't know, ended the spaces. I'm not sure. Maybe some
No worries.
connectivity issue or technical glitches. Anyway, let's please continue. Though I think you were already answering the question. You are in the middle of
Yeah.
yeah. Please continue that. Yeah,
Mm, where was I?
I think you were talking about
Oh
how
yeah,
the
yeah, yeah, yeah.
the
Right,
copper
right,
oil
right.
market, and then but again, coming back to the question is
Correct,
basically how you are kind of making this whole futures trading like for the
correct.
NFTs possible. So what is the
Yeah.
process? What are the technicalities? Yeah.
Correct. So when we understood that, let's say a physical commodity or the real world commodity has that market to short the NFT, when you are seeing an opportunity to profit from that event or that market that was not present, or that opportunity, I would say, was not present for the holders or any speculators. So what happened is this: we started working on this idea. We were started working on the risk management of this idea. Then in the initial days, we happened to actually see two things, that there are two ways to do it. Just like one is just like mutual fund ways, where you own the underlying assets. Let's say you own BAYC or something. So what you could have done as a product company, as Believe, we could have done actually, we could have bought the uh, let's say BAYC and MAYCs and squiggles and all these things, and then we could have simply fractionalized it and allowed the trading. But that was very limiting, because the limit was how much of the underlying assets worth today, and that in itself can go up and down. So giving profits to people could have been challenging in that, because you will have to sell the underlying. And that brings us to a very unique proposition, that was we cannot scale that. That was a limiting factor. But we were very determined to solve this thing, because back then it was very, very hard for people to understand that, boss, this market is needed and going to be needed when the market actually comes back again in this season. Because now we are seeing a lot of NFT market again taking from December onwards. We are seeing again a new euphoria in the NFT ecosystem. So then we understood that, boss, we will have to create a product where we can actually we will have to give a synthetic exposure of the price movement of these underlying blue chip NFTs. That essentially helped us, and we were able to conclude the product from end to end on paper first, that this is how we will do this thing and this is how the risk management will be taken care. All these things were possible when we were not having the underlying as a back as a backed kind of a currency. So it was initially challenging, but we figured out a way, just because we really wanted to like give this product out in the market. And now, because let's say once you have this product and when people start using it, and they are doing a proper risk management, they are hedging their position and doing all of these things, slowly and gradually we will bring asset backed product as well, where just like a Uniswap model or pseudo swap model, people can actually do all those things. We really wanted to move forward and build a whole ecosystem of NFT financialized tools, so that people can squeeze more liquidity, or they can hedge their positions, and they can profit from the opportunity that might be present today, but they do not have the tools to actually do that. So that's where we are aligned with this idea. And NFT in itself is a very in early stages. We are going to see a lot of cross pollination of many different things. that will bring on top of NFTs. So that is the plan today. Right now, we are super focused on making this product stable and making it appeal to the right audience. That's where we are right now focused upon. Slowly and gradually, we will move forward to many different products, financial products. The goal is to create new kind of financial products on top of NFTs with proper risk management. Of course, there will be challenges going ahead in this journey, but I think more or less the challenges will be sorted out with the proper risk management. And we have built standard operating procedures for any corner cases well in advance. And during this test phase, because we are already live on the testnet, we are trying to trigger those standard operating procedure by force and seeing how the market is reacting for us. When I say market, I really wanted to talk about the whole index, underlying orders in the trade book, the order book. So all these things we are trying to, like, by force, we are learning with our own product. So that's how the strategy looks like for now.
Okay, so basically, what I understood is, correct me if I'm wrong. Right now, you don't need to like do a deposit of the NFT. It's basically, it's not the hedging, or the positions are not dependent on whether if you own the NFT or not. Correct? Okay, okay. And
Yes, yes.
so, so how can I take the position? Say, for example, I'm short on, say, board apes right now. Okay, so what's the process for on the platform to do that
Yes.
for the
Yeah.
audiences?
Yes. Thank you. Thank you for the question. I'll clarify on this one. So first of all, it's a margin trading platform. It's a zero sum game. If somebody is winning, so on the other side somebody is losing. Uh, let's say it's a standard DYDX or GMX like experience. People will come, they will deposit the money in margin account, and they will have 10x of leverage that they can use. And once they have like their money deposited into the margin account, they can actually go and open the position by looking at the order book. Some orders are always there, the product is live, you can always check the trade. Right now it is only available to the whitelist addresses because we wanted to learn about the product much more. That's why we know whom we are whitelisting, so that we can talk to them, understand what they feel good, what they feel bad. That's how the product is right now structured. But a simple user can connect their MetaMask wallet. First of all, it is completely non-custodial except the order matching. Order matching is because it's not efficient for on EVM chain. It is not efficient to do the order matching on chain. So except that part, everything is non-custodial. People will connect their wallet, deposit money. Step number two, deposit money in the margin account. Step number three, it's like standard procedure of buying in a spot market. People can go long or short by just placing the order by looking at the order book. And they will, once the position is open, the market data continue to get updated based on the change in your position, because perpetual as a product is a different kind of a product where you receive funding every hour, and we settle it on 24-hour basis. I think that is flexible right now. In the mainnet it might differ. So the majority of the, let's say, most this is the best way to put it. The most popular side pays the less popular side, so that there is an incentive for the less popular side to always open up the position. So this is how the market works. To understand this, and the user persona which will interact on our platform is very specific. These guys are traders. These guys either own NFT or they want to short NFT, and they have actually used DYDX or trades, or they have traded perpetual in the past. These are the user persona that we are actually trying to market. It's nichest of the niche, but this is one area where we are really after, because we think this is going to open up a lot of opportunity for those people to hedge and speculate on these kind of markets.
Got it. Understood. Now I think I understood how it works. Now I have another question for you, Vikas, the following to
Sure.
this main question. So, for example, say, let's talk about Bored Ape only because that's a famous NFT.
Mm-hmm.
Say, there's a contract, like, say, there are 10,000 contracts. Each contract is for, say, $1. Okay. And there are people doing long and short. So now,
Mm-hmm.
suddenly, the price of the actual Bored Ape NFT falls down. The floor
Mm-hmm.
price goes down 30%.
Mm-hmm.
Okay, so how
Mm-hmm.
does that affect to the future? Is it like dependent on like it's irrespective, like you don't track it, it just how is the it's basically the demand and supply game. Is it like this or on the platform, or it will be kind of managed by you guys also?
So we do not, let's say, we do not play with any price discovery that is happening on our platform or outside. Let's say the floor price that is being discovered, that is completely market dependent. So price discovery of the floor prices of these BAYC will happen by all these marketplaces that are out there. So that is point number one. Point number two, once the price of these underlying assets comes to our platform, they are again not manipulated on our side. They are completely is a function of again the order book that is present on our platform. The difference between of these two will essentially drive the funding towards the people like who will be winning in this market. So let's say if suddenly it is going down suddenly, so the people who have shorted the market will eventually be able to fetch more money. I mean, by winning. And some funding will go to the people like who were long, because now the most popular side is short. So they will pay some funding to the long, because long pays the short if the funding is positive. You when you did mark minus index, so the index price is the fair price which is sourced from the free market, and mark price is something which is the market price that we find out on our platform. The difference of this mark price minus index price becomes the deciding factor who pays whom, and that's how people actually make money in this and lose money as well. But most important thing is the presence of this tool where they can.
So I think you were talking about how the function works on the platform. Basically, anyone can go put their like the like just like the futures, put their order, and yeah, it's good to go. And
Yeah.
how do you decide the fractions for the asset? Like,
uh the we again, so first of all, again, we do not interact with the fractionalized part of it. We just allow you to place the order up to, let's say, so let's say it's a function of three things. One, what is the price of ether? Because ultimately the whole NFT market is marked against ether, because you always say 120 ETH or 60 ETH or 15 ETH as a price. So one is the ether price. Second, the underlying price of the NFT market index, or let's call it NFT index, SNV Supernova for now. So Supernova can be of 10 ETH or 12 ETH. And then how much you wanted to buy. So let's say you wanted to buy in for zero point 0.1 ETH, right? So for zero point 0.1 ETH, we have to calculate that how much do you get in the Supernova assets. So Supernova is like a token which is non-tradable outside, which you get, and that stays on the platform itself, right? So it will allow people to hedge their position on the if the opportunity exists, and then they can simply go move. I mean, move assets in this direction. We we think that we are becoming the final Lego that is required in the, not final I would say, but let's say one of the Lego that the market require for them to create another kind of a fluidity which will bring more liquidity into the market around NFTs. So that's where we are with the product.
awesome, awesome. I think, yeah, there are some product related questions as well. But before we proceed, I just want to add something really interesting. We conduct this Twitter Spaces every Wednesday, 9 p.m. IST. We invite speakers around the industry focusing on metaverse, NFTs, and even Web3 crypto in general. We talk about a lot of interesting topics and also the experts every single Wednesday. And all the our team has decided to keep this every Wednesday 9 p.m. no matter what. So we have been doing it for 4 months, whether it's one person listening, 2%, it doesn't matter. We'll be consistent, and we have been doing it for 4 months successfully, 3 months successfully since Jan first week, and this is our like the plan to uh, invite interesting people, talk about it. So just wanted to share this with everyone in the audience. And coming back to our guest, also, one thing I really wanted to add from Acknowledgers is we are launching something really interesting called DODAS. DODA stands for Discovery of Digital Assets. It's the engine that we have created. We have been working for over a year now, and I think it will go live soon, maybe after a month or maximum 2 months. Uh, we are really excited about it, but it will change the way how people search and how metaverses and games they build their their whole uh, like the asset search, and also there'll be some really interesting tools as well inside that. Uh, so I'm pretty excited, and will have a huge impact over the whole space in general. So that's about it, and I'm really excited for that. Coming back to the spaces, so the team is here. Believe Club, Vikas is the co-founder and CEO of Believe Club is here, and we're having really interesting discussion. Usually we keep it only till 30 minutes, but I think I'll extend the spaces today. Uh, I have one more question, Vikas. Then what I'll do is I'll open the questions to the audience so that they even they must be having some queries they can ask, because I have a lot of questions. So one really interesting question is, say I own 10 board apes, Vikas, okay, and I have kept a short on the Believe platform, and I've just sold all other at floor
Mm-hmm.
price, like I'm just putting it down so I can manipulate it, right? uh, so
Mm-hmm.
will I win on your platform, or is there a way you stop this, like a sudden sell? Because NFTs in general, you see that the trading is
Mm-hmm.
not that far, like kind of tokens, because like even if say 10
Mm-hmm.
people are selling, the price affects a
Yeah.
lot. Okay, so
Mm-hmm.
is there any mechanism, or these people will win always, like someone if they're
Sure.
shorting? Yeah.
Yeah. Yeah. This is a very important question because again we think of this situation when we were building it. So couple of things that we will tell you, like what has actually made the NFT ecosystem more stronger than before. So earlier the scenario what you just mentioned used to happen until Blur came out, right? When you try to sell it on OpenSea, LooksRare, all these platform used to actually, I mean, let's say Franklin has 69 board apes. That guy actually used to be Machi Big Brother. All these people used to actually move the prices of the assets, right? Machi actually lost like crazy amount of 4,800 ETH in the Blur token thing just by becoming the exit liquidity for a lot of people, right? So my point is this: it used to happen a lot, but from the day Blur came into the picture, first I'm just trying to tell you like what are the external factor which has actually helped the NFT ecosystem to become stronger, and how Believe also taken some steps to ensure that we are not affected, or we remain loosely very less affected from these kind of manipulation. So first is this, the Blur, because Blur actually incentivize you to put the bids in their order book, which essentially increase the depth of it, and that makes the market a little bit immune to these sudden price shocks. Recently we have seen 10 or 12 BAYCs or MAYCs being sold, and prior to that we have seen around 20 BAYCs being sold in the market. That may be the effect of the liquidation that has happened on the Bendao, but price didn't even flinched. So these kind of things essentially takes care of it by itself when the market is actually absorbing much more solid products from the outside. That product like Blur, that is one. Second is how do we stay sane when it comes to like this? We have created our own way to take in or factor in the recent price that we get from the connected APIs product, connected APIs. So we have already like five we source the price from five different sources, and then we actually aggregate them, and then we also have our own logic to put how much weight do we want to give onto this upcoming floor price. And there are again, let's say, there are again companies like Bitscrunch which can also tell you figuratively using their machine learning model that how much should we trust them. So one of the factor can be the weight that they are assigning on it. But we are still saying that we are not considering them 100%. We are considering that also one of the factor. And other than that, there are ways by which we can twap them time weighted average price. So we can actually take the price in a weighted average for a time weighted average format. So considering all these factors allows you to become lesser immune around this price fluctuation. Also, the final thing is the the mathematical product that we are doing. So we are taking the geometric mean of it. So geometric mean essentially is the nth root of the n elements that we are taking. So right.
This has happened for the first time I'm hosting, and I don't know what's wrong with the internet. I'm using the same internet, but it's working properly on my phone, and then there's another acknowledger login, but I don't know. I'm not sure what's wrong. But anyway, uh, I think we are really persistent, so we are doing it for the fourth time again. And thanks to the Vikas and his patience. So I appreciate it. Again, I think please, I think Vikas, you can continue your previous answer, and then I think we'll open it to the audience. They can ask questions. Otherwise, I'll ask one last question and then we'll end it. Okay, thanks.
Cool,
Please go
cool.
ahead,
I think
please.
I think mostly I covered the areas. There are two areas. One is external because of the market has evolved a little bit. That I mentioned the blur factor, and the second one is like how we are also ensuring that we are not just taking the immediate uh, floor price and allowing it to be exposed to the market. We are also consciously adding a little bit of factors on top of it, but everything will be transparent enough for people to actually calculate it with the pen and paper. So that's how the index is designed. So yes, so short answer, yes, you will be able to profit from it, but the profit may not be as per your calculation. It may be a calculation which market might actually take some time to respond to the change in the behavior of the index. And so maybe let's say if you have planned for 10, you might get, let's say, 4 to 6 kind of thing. So maybe the impact that you wanted to do, and that too, you will have to actually, maybe if you actually really want to do that, maybe you will sell it to open market, because that's how the floor price is registered, because how the people actually do that. Also, one more point, we have actually created our own algorithm also, that we will derive our own floor price from the trades that are happening. So it will not be the asset that you are listing. It will be the actual trades that are happening, and that will be done completely with on-chain information that is present of trades happening of those things. So we have already, like, quant team has already worked on it. So the difference, I mean, we are getting the floor prices driven from the trades, derived from the trades, almost mimicking the floor price that are there. So, I mean, that are there historically. So we will replace this feed coming from the external APIs. We will continue to actually derive our own floor price with the trades that are happening. So that will also change a lot of attack vectors also. I mean, that will reduce.
Okay, awesome. I think so. Basically, it's kind of like BitMEX in the past. Like it's an independent market, and say depending on the contract, there were like different prices based on the demand and supply. Yeah. So I'm just giving an analogy for the audience so that,
Yeah.
but I think it's the right way to go ahead with, and I think it will be really powerful when
Yes,
I think executed successfully.
we
Yes.
are trying to cater to those people, let's say, who really wanted to play safe, at least for now. and we are also learning right now with them. Of course, there will be different kind of learnings, but I think we are trying to put the guardrails wherever we can. But otherwise, it's a very simple market, and people have fair exposure of how to go long and short. So it's a pretty standard thing that we are coming up with. Yeah, that's it.
Great, great. Thanks, Vikas, for answering the question. So there are, I think, two requests already. I think first is from Frank. Frank D. Gotts. So I'll bring you up. You can ask your question to Vikas. Please be aware of the time. Don't put too long. And Vikas, even for you also, like keep it short and crisp. Yeah. Okay, Frank, you can go ahead,
Hello,
please.
sir. Sir, I wanted to know how order matching is done, and do you have a market maker?
Uh, Frank, yes, we already have a market maker now, and in the market also, like we will have one. So that's one. And order matching is happening like off chain. It's just like DYDX. That order which you are placing that are definitely on chain. You can find them on chain. But the order matching, like to figure out like which order should match, we have written our own subgraph, which essentially helps us to figure it out what is the best and efficient method to do that. I hope
Sir,
that
so
answers.
if I'm longing, someone needs to short to make them order match, or will the market maker absorb my order, sir?
Sir, it's the combination of both. Like even in the spot market, like Binance, they essentially do that. So any market which is having this kind of order book, they figure it out. I mean, every exchange, almost every exchange, have some organic liquidity, of course. So we have to go through this true of illusion, this true of reaching to the organic market. But in the initial days, there will be whatever the organic market will come. They will come because of course we also have to become profitable by this product, so this will go there. The market makers involvement will be lesser and lesser as we progress.
Sir, one last question, sir. What is the minimum volume you need to have a market maker on board? What is the minimum trading volume you're expecting every day?
That I can't answer because I think our competitors are having pretty staggering volumes. Like one of the one of the competitor actually launched and they immediately boasted of 1,000 ether worth of volume on the first day. I don't know like how much is the wash trading or how much it is involved, but we really want to learn slowly and gradually. We can also like because everybody knows this thing in the market, like it involves some sort of wash trading. We really want to try to stay away from them, not want to impact onto this because anybody can do the on-chain analysis. The tools are there. So I think we'll try to stick to the basics. Don't want to like completely go blow it out of proportion because that's a function of how much money that you can lose. So we would want to be very skeptical about everything and being practical because of the market macros and the overall market as well.
Thank you so much, sir. I'm a big fan. Thank you so much. I love learning from you, sir. Thank you. Thank you.
I really want to highlight one thing about Frank. This guy is like completely persistent on our product as well. And I have to block him just because of the kind of comments that he generally puts. But glad that I can answer and clarify your queries, Frank. That's great. Thanks a lot.
Okay, great. So we had narper.btc. I'm bringing you up. You can quickly ask the question. This will be the last question for the spaces uh, from the audience.
Hi guys.
I guess
I'm not
Alexa,
I'm
yeah,
not sure
yeah. Please go ahead,
if I can
Narper.
quite live up to the incredible voice of Frank, but I'll do my best. But yeah, thanks for giving an explanation. I kind of went in and out of the call, so I didn't see or listen to everything. So forgive me if I'm covering kind of ground that you've already gone over. But you know, from a liquidity perspective, how are you actually plugging in liquidity? Is it a typical sort of market maker mechanism where you have an entity that's you know filling the orders, Because I know obviously a competitor in the space at the moment, NFT Perp, obviously use an automated market maker, and they have sort of their own clearinghouse. But I'd love to hear how that works from Vikas.
Sure, good question, because we also, so what happened with us is, like, while we were doing our own product, we also happened to figure it out, like we can also do it with VAMM. And trust me, it was like all independent. Like, we never got to know about NFT Pop until, let's say, August or July or August last year. And somehow the market actually was like exactly same for us and them. Doing it with a VMM definitely is easier than doing it with the order book. We chose order book for a couple of reasons. First of all, the price efficiency, that it is more capital efficient than losing money in the slippage,
Yes.
that that allows you to actually trade. And second, uh, if the product becomes better, it is always going to be much more appealing for people to trade in a simple order book rather than this one. So yes, in the starting, we will have to pass through this cold start problem, and for that we definitely have market makers. That's why I mentioned that that everybody in exchange, order book exchange, require that initial support from these kind of businesses that are out there. So that, yes, short answer is that.
Yes.
Longer answer is, we are also working, we are also trying, making our product go out and far out and wide, so that more and more people can join. Because if there is a, because we feel that there is a market and there is a user persona which would love to actually go in it, and more different ways of NFT, I would say ERC 721 products will come in the market, and they will require these kind of sophisticated tool to manage liquidity going forward in the future.
Okay, yeah, thanks for that, Vikas. If I could just ask again another question, because you don't really find, there's no, typical market maker for a product like this,
Yes,
right?
yes, yes,
So, for
yes.
example, DYDX, we use, I think, 0x to plug in pricing and liquidity. But is it like a independent body, like that you have a relationship with, or is it an institution that is marketing itself?
It's first of all, it took a lot of persuasion skill from our side to actually make them bring it to the edge of the frontier that we already anyway play in Web3, right? So it was easier for them once they understood that what kind of market that we are going after when I discussed the TAM of this. So it is the same market makers which generally has been doing and has the experience of doing the stuff. So these are not new entrants. These guys are the existing like market makers which used to provide liquidity in the crypto perpetual DEX kind of model. So they were very confident and comfortable when we talked to them, and when they once they understood, they know their game, they understand this thing, so they would be able to actually make better things for us and for all the stakeholders involved.
And it's like, for example, I think with VAMMs as well, like you can go on June, right, and see the clearinghouse wallet balance, and see kind of, the mechanisms that are being pushed in terms of margin. I take it like the platform will be, Web2 based. So, what is like the quantity that, the market makers have committed to propose to this project?
That's a function of how much we want to work with them. So initially, uh, we will be restricting a position size that people can open on the platform when we go on mainnet beta. Reason for that is very, very simple, because it's a new kind of product. We also want to learn as we grow in the market. So you cannot, let's say, so consider this, let's say, even if you are Franklin who has 69 board apes, I will not be able to, let's say, absorb your 1,000 ether worth of volume trade on day one, right? So maybe I will allow you very smaller position that can actually give you, because it's already a 10x leverage market. We already have to take care of different guardrails that we have put in just to secure the product and make the product go slowly and gradually go up to a limit that we will open, right? So I think, what was the first part of your question? Sorry, that's the second part of the question.
Just like for example, the proposed sort of ring-fenced quantity of funds that the market makers are committing to. That would be good to understand. Because I think, from a user looking in, I think to myself,
yeah,
right, realistically,
yeah,
how
yeah.
large are my orders going to be, and how large could they be within a certain space of time? For example, if a market maker is only committing, 50k USD or 100k USD, it's not going to be as liquid as a platform then probably a few months down the line when more liquidity comes to it through
Sure,
private market makers, right?
sure. So in the initial, we will put the guardrails. Initially, we will allow, let's say, to put you, let's say, 2 to 5 worth of ETH of, let's say, position size. Because then again, I'm saying, because we are entering in the market, we really want to try with the best foot forward method. We cannot, let's say, allow a very large position size. We will not be able to, let's say on day one, you will be able to do that. So according to that, there will be a function of like how much liquidity do they need. We are working with them, understanding like what is and that's initially our conversation went up to this point where we were actually understanding each other's capability to help sustain this product. So I do not have a very ready number to share on this public platform, but we are figuring it out by learning the things that they have done with the prior DEX order book platform or DEX platform in which they have provided liquidity and how much profit they were able to make for everyone.
And so that would be 2 to 5 Ethereum notional size or collateral.
The position size that you can open, the collateral will be 1/10 of it. Yeah.
Okay, understood. And is it a fixed margin of 1/10 or is it variable? Can you change the margin?
Yeah, you can go up to 10x. Yes.
Okay, interesting. Similar to sort of DYDX, and I think with typical like clubs as well. Yeah, like you said, I think the initial start of the process, it's going to have some teething issues in terms of liquidity and pricing, whilst people, which is completely normal, obviously.
Yeah.
So yeah, it's interesting to see sort of the CLOB come over to this side, because I've only seen it with kind of like the old school AMM model, like PERT protocol, and I know Drift had a big issue with the automated market makers, right? And they can be exploited quite a lot. So I think having it in Web 2 kind of steers away from that a little bit. I don't know if you agree.
Correct. We are completely non-custodial that way. I mean, all the orders stay on contracts. Anybody can go and check. We are also a lot of effort has gone into building the infrastructure because it was like a 0 to 1 on a lot of aspects. And when you do something novel, you essentially solve some of the problems for the whole ecosystem. So yes, there will be too many fresh things that we will also bring to the table, but we want to be really, really practical that how do we want to approach. We don't want to burn the house under any circumstance. So we have all the standard operating procedures that is required to essentially keep the market healthy.
So the trades are facilitated through a smart contract. They're not Web 2.
No, that's not Web 2. That's why I answered you that everything is non-custodial except the order matching, because on EVM order matching is just not possible in the gas efficient way. Yeah.
Okay, I'm with you. So essentially the functions, deposit withdrawal functions as well, typical just Web3 smart contract, and also
absolutely
the trading functions. Okay, that's interesting. I didn't know that.
Yeah, you can follow the previous conversation actually. This whole thing is actually now went into 4 parts. So I think the third part was having all the answers related to how the product functions.
Sure.
Yash, the host, actually asked a very good question around that. Yeah, thank you.
Yeah,
but
well,
thanks for the questions, Frank and Napper.
Worries.
Yeah, thanks a lot.
All right, thanks.
Okay, awesome. So I think really interesting discussion we had. Thanks everyone for joining today. And by the way, Vikas, just quick question: who is competing with you right now?
Yes.
Quickly, don't need to explain. Just give the names.
NFT Pop, NFX, Drift, and few more platforms. But I think the kind of skepticism that we have around everything, so it's just the most paranoid survive. So yeah, these are the players.
Yeah, totally agree. Awesome. So thanks a lot, guys, for joining today. So we at Acknowledger, we keep this Twitter Spaces every Wednesday 9 p.m. IST. We have been doing it since Jan first week, and We have taken the pledge to be there for the whole year, no matter what, who is there, but we will be there. Uh, we are three founders, so any one of us will always be there consistently, and we'll be inviting amazing speakers, guests, and give you a lot of alpha about what's happening in the industry, what's happening in Acknowledger, what are our future plans, and we are going to soon launch Dodas. Dodas will be the game changer for the whole Web3 metaverse space and even NFTs, and we are really excited about it. Uh, and uh, that's it. And from thanks a lot to the Bliv.club team, Vikas, and the whole everyone from their team for being here and giving their valuable time, sharing a lot of interesting insights about their product. Really loved the discussion, and wishing you the Believe team a very happy, successful journey ahead. And they just launched their testnet as well, so really excited what's going to come next. Yeah.
Thank you. Please follow Believe Club and join the Discord to stay active. I think that's the best place to find out the alpha or the next steps. And you can always ask the questions. We will be there, or you can always like tweet about it. So we will do that. Yes. Unless you do not become
Okay.
Frank Degots, like talking random stuff. Yeah, thank you everyone. Thanks a lot, Yash,
Okay.
for
Awesome.
managing this.
Awesome.
Yeah,
Yes.
thank you.
Yes.
Thank you.
And yeah, appreciate it. So on this note, I'll end this and see you again in the next week. We have someone really interesting coming next week, and really appreciate to all the listeners, the speakers for coming. And there are certain challenging times right now going on, but don't worry, we'll survive it. We are all going to make it. Thanks a lot. See you again next week. Thanks a lot. Bye bye. Take care.